So what an awful day it was in the stock market yesterday. It was a bloodbath out there, and I didn't have time to record and edit the video yesterday with the drop that was really late in the day. So we're going to cover it today. We're going to look at that drop in the stock market, what is going on, and are we having the start of a 2025 stock market crash? Hope you enjoyed the video, guys. Hit the like button, let's get started. So the stock market had an awful day yesterday. As you can see here, the Dow dropped 1,100 points in the 10th straight loss. I think this is the first time it happened since 1974. That was what's getting posted everywhere during the day. And also, what was the reason why? Well, basically, the Fed were very cautious around future cuts. They said that the cut they did was a very close cut, 50-50 cut, and people went, well, we thought this was guaranteed, and the fact that the Fed had talked about it was quite close if they were going to do it or not, and also they were quite hesitant about future cuts going forward. It made the stock market quite nervous about where interest rates were going in the future. Now, in my opinion, the reason why really the stock market pulled back on this news is that there's just been so much priced in. The stock market has run up massively so far this year. If we look at the S&P 500, it's up 23% year to date. And really, like the last kind of couple of years, the stock market has been on a mega run. In the last 5 years, the stock market is up the S&P is up 82%, when the average return is supposed to be 9%. So the S&P is massively overperformed, and I think it's looking for its next leg up. And it needs the good news. It's had the Trump news, it's had the interest rate cuts, and now it's like, what's the next catalyst to take us higher? And if we're going to have interest rates not coming in or getting cut, maybe the nervousness is around what is the next kind of cycle to get this stock market higher. And the fact that we've gone up so much, I think it's a healthy time for the stock market to kind of pull back. Now, what makes me laugh, and I think a few people aren't aware of this, is like fear. So first of all, make this clear. I can't predict the stock market. I do not know if the stock market crash is coming, when it's coming, how long do we have to wait, and how bad is it going to be? We don't know. But what I will say is the media loves stock market crashes. They love it, especially on YouTube. And I'm a little bit guilty of this myself. I'll be open about it. The views on fear are so much better. The views that people panic. People panic in a stock market that's crashing, and they're searching for information. They're searching for the information because everyone gets nervous. People panic selling. They're seeing the money go down. That's mentally so much of a bigger impact than seeing your stocks go up. And people are searching for information. So from a media point of view, the media loves negativity because the views go up. That's why when you turn the news on, if you put 10 o'clock news on, everything on the 10 o'clock news is bad news, because that gets bums on seats. People watch that. If it was all happy, people won't watch it, but that's what gets people to watch the stuff. So if you have CNBC on your phone, and I saw this the other day, you see all these notifications coming up where they talk about the big drop, worst 10-day, worst since 1974. You've got capital letters, full capital letters coming up. This the only time that CNBC send you notifications and they're all in capital letters is when there's a stock market crash going on. And just this one day of fear, or a couple of hours of fear that was spiked off this interest rate potentially not happening as regular, just that one moment of fear, look at what it does to the stock market. Oh, it was a pretty decent day, to be fair. The stock market was up slightly, and then boom, massive drop, down 2.95, let's call it 3%. S&P down 3%. And just that slight little bit of fear, and look how fast the stocks drop. Hims and Hers 8% down, DraftKings down 4.8%, SoFi up 8.5%, down 8.5%. I wish it was up. Mercado Libre down 5.13%. And even though, overall it doesn't make a big difference. Year to date we're still up 196%. But the example is that when fear comes, it's boom. It takes over the market. These stocks that have been steadily going up, taking the stairs, they hit the elevator. The elevator breaks, they drop. And these stocks, with just a little bit of fear, you look at the S&P and you look at how much that dropped with a little bit of fear. Look at how fast these stocks drop with that fear on there. This is why when you get the S&P and it ends up moving down 5%, 10%, all of these individual stocks drop massively. This is why when you have those little bits of fear, and these little bits of fear last for 3, 4, 1 month, over a 1 month period, you have all these individual stocks dropping 10, 20, 30%. And very quickly, people don't realize this, is when fear takes hold, it takes hold massively in the stock market. And these stocks come so much cheaper very, very quickly. And you guys that have been through the 2022 stock market crash, you guys that have been through the COVID crash will know that feeling. Right now, there's a lot of retail investors in the market that don't know that feeling, and they'll be surprised how quick that happens. Now, overall, like I said, in my opinion, the market's looking for a reason to keep pushing things up, because it's already pushed it up on so many bits of news that it needs another leg forward, but at the moment it's struggling for it. And now it's at the point of view where maybe it's looking for something to kind of sell off, something to bring this market down, because all this is short-term noise. Interest rates, everything like that, it's all short-term noise. When you look at long-term, the big reason why the S&P has done so well this year isn't just because earnings on businesses have increased. The real reason why the S&P has done so well in the last year, 2 years, is metric expansion. Not only has the S&P gone up from an earnings point of view, it's gone up from metric expansion. The S&P normally trades at 20, 21 times earnings. Right now it's 30 times earnings. You've got the S&P that's about 50% higher than where it normally trades at. So all these gains at the moment, people are acting like it's because of some amazing financials that are going on in the world and in the US. It's not. There's some element of that. But some of the reason why the S&P is up so much is because of metric expansion. And it can't just keep expanding. Eventually it has to have the reality check. How many more buyers are willing to come in? And the thing is, the more you get extended, it leads more people to sell out when the panic happens, the drop happens quicker, the fear takes over quickly, because there's a lot of sellers there wanting to lock in that profitability. And that's a big concern for me, because when we look at the S&P, the only times it's been higher is in 2020, 2021. What happened? Stock market crash. 2020, the Great Recession. What happened then? Stock market crash. The tech bubble, stock market crash. So the other times it's been this high have led to a crash. And that's the big concern. Now, like I said, I don't know if a crash is coming. I just look at the information that's out there. In my opinion, the S&P 500 has been overvalued for the last kind of 4 or 5 months. I've been very concerned for the last 4 or 5 months. I don't sell my stocks because of it. I still keep a lot of my money invested in the stock market, because I think, you know what, I don't know where the top of the stock market is. And if I did sell my stocks 4 or 5 months ago when I thought it was starting to get pretty overvalued, I would have missed out on a lot of profitability there. But because I've stayed in, I'm still riding the wave up. Now, I am preparing for that in another aspect, which I'll actually come on in a second. But because of this insane valuations, you see how quickly some of these stocks drop. You know, I talked about some of my stocks here, which I actually don't think some of these are that bad valuations. But you look at some of the stocks that are in a bubble right now. Bitcoin's one of the biggest indicators for me that if we're in a bubble. Whenever we're in a bit of a frothy market, Bitcoin is high. When peak fear is there, the Bitcoin is down. So if we zoom out, for example, you look at the 2021 when the market went insane, highs. When there's the big fear out there, it's at its lows. When the bubble, the frothiness comes back, it's at highs. And Bitcoin is an indicator for me about how frothy the market is. And that rocket ship chart that's there is a big indication that the stock's a little bit frothy to me. And, you know, a lot of people say that, Bitcoin is it's separate to the market. It doesn't matter what's going on in the economy. It won't affect Bitcoin price. It doesn't matter what happens with the stock market. It won't affect Bitcoin price. So why was it yesterday that the Bitcoin went down 5.4% when the stock market also went down? If it's separate from the stock market, why is it going down that much when the stock market's having a horrible day? That's always a big thing that I see a lot of people buy Bitcoin is the argument there. But I think there's just so many people getting into Bitcoin now they don't even believe in it. That's the scary thing. They're just missing out. They think they're missing out. And I'm not a big fan of Bitcoin. I mean, you got like Tesla. You know, Tesla is up to the year to date 77%. It's 120 times earnings for a company that just came off 7% revenue growth and 16% net income growth. It's not bad financials. It's not 120 times earnings. We've got Palantir, 361 times earnings. Good company. But for a company that is doing 143 million, growing at 29% a year, 361 times earnings. Robinhood, 63 times earnings. Granted, the financials are doing quite well, but this is once again a stock that is relying on Bitcoin. Bitcoin falls massively in the next year. Where's Robinhood going to be? It's going to be on the floor. Costco at 56 times earnings. Once again, absolutely fantastic company. But 56 times earnings for a company growing at 7% a year? Give me a break. It shouldn't be doing that. Apple's 40 times earnings. For a company that's growing 6% a year and the profit's down. 40 times earnings, guys. It's insane. So this is the thing with the stock market at the moment, is that there's all these news stories. People go, the stock market is up because of X, Y, and Z. The stock market is down because of X, Y, and Z. Realistically, let's look at the facts. The facts is the S&P is ridiculously valued at the moment. Ridiculously. There's no arguing about it. The only times that we've been higher is when we've had a stock market crash. Right now, it's a massively overvalued situation. And the reason why is because we've got stocks that are, when we look at these stocks, they're trading at 120 times earnings, 361 times earnings, 63 times earnings, Apple at 40 times earnings, Costco at 56 times earnings. It's crazy. It's absolutely crazy, the valuations. And when I look at a stock market crash, are we going to get one? In my opinion, yeah, we are going to get one. I don't know if it's going to be maybe a correction that's 10%, 15%, a stock market crash of 20%. I feel like we need a pullback. I don't know when the pullback's going to come, but I do feel like we're going to get a pullback. This is the thing here, okay? In my opinion, cash is king. Like I said, I don't know when the stock market's going to crash. I thought the stock market was overvalued months ago. I thought the S&P was overvalued 4 or 5 months ago. Did I sell all my stocks? No, because I don't know where the top is. I don't have a crystal ball. I'm not going to pretend that I know where the top of the market is. And if I did sell all my stocks, I probably missed out on a lot of gains there. So I'm glad I kind of stayed invested in the market. What I am doing is I'm just taking a bit of profit off the table. There's certain stocks out there that you've seen that, in my opinion, are very rich valuations, gone up a lot. And I am just taking a little bit of profit off the table. I'm building up that cash pile. Cash is king. And what I'm doing is I'm getting a nice cash pile that, you know what? I've still got a lot of money invested in the stock market. So if the stock market continues to go ballistic, if it continues to shove to really high valuations, I'm still going to be making money. But what I'm also doing is, because cash is king, is I'm building up a cash pile. My cash pile is now the highest it's been since 2021. I am pushing towards a 20% cash pile. And if there's a stock market crash, guess who can take advantage? Me. I've got the cash on the side. I can go buy stocks. I can buy a lot of stocks. And any of you guys that saw that fear in 2020, 2022, and the opportunities that are out there, you were wishing you had cash to keep buying stocks. And right now I've got the cash pile. So for me, I don't mind where the stock market goes. If it crashes, I'm quite happy because I've got cash to go buy those opportunities. And I do think the stock market is overvalued right now. At the same time, if the stock market continues with its metric expansion, if the S&P 500 continues to go up, I'm going to win that way as well, because I've still got 8% of my money invested in the stock market. So I don't need to worry. There's a lot of people out there that for the first time saw this market go down and they panic. They're panicking already. Never mind if we get 3 constant days of this, a month of this, 6 months of this. Imagine the panic they're going to have then and where stock prices would go. But for me, I don't care. I log into my stock market account every day, and if the stock market is up, I go, hey, I made money today. If I log in my stock market account in 5 days' time and the stock market's fallen 15, 20%, I'll go, hey, I'm not really bothered, because guess who's got the cash on the side to go buy some of these stocks now? So for me, that's the great thing, is just I'm patient. I'm in a position where I don't have to worry what happens in the stock market next. And even though I believe we could be heading for a correction, even though I believe we could be heading for a stock market crash in 2025, because I think there's a lot of stocks out there, the S&P 500, that's really overvalued, I'm not really bothered if it does or doesn't, because I'm prepared for either situation. And that's where I'm at right now. So that's my thoughts anyway. Hope we cleared a few things up, guys, and how I'm kind of positioning right now with what's going on in the stock market. If you could hit the like button, if you're around here, subscribe. Tomorrow I am going to be talking about a new UK growth company that I've been buying. Thanks for watching, guys. See you in a bit.